It means securing your finances, your economic possibilities away from the conventional system, which means securing it from the business cycle, which means protecting it from a legal standpoint. So what it means to me is it's a way to live a financial life, just as Nelson said, that's very, very peaceful. And if you stick with it, very, very prosperous.
Ryan, thank you for joining us today. And we want to get started with you telling us about your story and how you discovered the infinite banking concept.
I wanted to be an economist, specializing in something called the Austrian School of Economics, which Nelson, as I would later find out, Nelson was very fond of, having been personally mentored by Leonard Reed, co-founder of the Foundation for Economic Education, as he would always remind people in his seminars. But that was my plan. So I'm from Southern California, eventually graduated with a bachelor's and master's in economics from Cal State University East Bay, in not all the way Northern California, but like Bay Area. It was during that master's program where I was kind of miserable, because mainstream or conventional economics is agonizing and really has very little to do with economics as I understand it, and as I think the history of the school of thought would understand it. And so I was looking in January of 2016 at the biographies of men and women, mostly men, that I knew of involved in Austrian economics outside of the academy. I wanted to know what, if anything, was possible that I could do in Austrian economics, but not in a university setting. And so I came across Robert Murphy and was reading through his bio, and I knew a lot of the various affiliations he had. But the one I didn't know anything about was the Nelson Nash Institute. And so I pulled up the website. I saw that there was a book. I ordered the book. The book got there. I think it was an Amazon thing, got there in 2 days. I read it twice in a weekend. And everybody has their experience in catching IBC. Some it takes a little longer, others it's fairly quick. And for me, it was virtually immediate. It was like, wow, okay, let's learn more. So after going through and back through becoming your own banker in January of 2016, I started to look to see if Nelson was still around, if he was still active, if it was possible to engage beyond just the book. And sure enough, he was still doing, at that time, his 2-day 10-hour seminars on a Friday, Saturday. And lo and behold, in May of 2016, he was scheduled to do a seminar with Kaylin Peterson outside of Sacramento in Northern California. So I immediately signed up. I think it was like $60. I'm like, are you kidding? Let's do it.
Big chunk.
Yeah. So I signed up and was super excited. By that time, I had already planned to attend Texas Tech University and their PhD program in agricultural and applied economics. Texas Tech had this organization called the Free Market Institute, which, as of this recording to this day, is still there. And my plan was to go enroll in the PhD program there. I ultimately did a year of that program. But in January of 2016, I was already on that trajectory to go get a PhD to become an Austrian economist. And I knew that Robert Murphy was a visiting assistant research professor, big, long title that basically meant no formal teaching load, but he was affiliated with the Free Market Institute and was living in Lubbock, Texas. And that was a big part of why I wanted to go to Texas Tech for that PhD program. And then, of course, I know that he's, at that time, co-founder of the Nelson Nash Institute. So I reached out to him, and prior to going to the seminar, and essentially got on Nelson's radar ahead of time. So by the time I attended the seminar in May of that year, he knew I was coming. In fact, I'm redoing my website right now, so I'm going back through a bunch of my files. I found my recording of that seminar where multiple times where Nelson's doing his little riffs and anecdotes on Austrian economics, he would ask me different questions, which I didn't remember. And so I'm on the recording, like responding to him during the seminar. I was ecstatic that I found that. So anyway, that's how I met him. And then after a year of that PhD program, decided that conventional academia would not be for me. I went to work for a Big Four financial company in August of 2017, which didn't work out.
All right. Yeah.
Then I completed the practitioner program in October of 2017, met James Nethery, who became my mentor and today is my mentor. And I've been doing IBC ever since.
We interview all applicants into the IBC practitioner program. You send in your agreement, we interview you. And of course, you're like a no brainer, but we have a mentor program, which is, I'm going to say subjective, which has always been a problem with me personally. But I was talking to Nelson, Robert, and Carlos, and it's like, if we don't put Ryan Griggs with the right mentor, then he's not going to stick. Okay, because I mean, maybe I'm wrong. Maybe we're going to stick, but I said I don't. You don't need to be thrown into a sales regiment, and all the click funneling and all that stuff like that. You need to be the right kind of guy or gal who's intellectual, who understands, what Austrian economics is and has a sense of the relationship between both macro and microeconomics and the infinite banking concept. The you and me level plus the implications at the national level if it's done right. Anyway, long story short is, I like to believe that I take credit for putting you with James. Okay, I do, man, yeah. Because James taught Nelson a lot of stuff about his basically history. And economics in my mind and history go hand in hand. But James used to say, Nelson, if you read Eustace Mullins yet? He goes, well, who's he? So James opened up that to him. So anyway, I keep patting myself in the back, Ryan, for sticking with James. So anyway,
I'm flattered by that, David. However it worked out, I'm glad it worked out.
Yeah. I mean, I keep, I use that as an example when I talk to students that, nowadays we ask them to have a sponsor when they apply for the program, if they're brand new to the insurance industry, and that sponsor's got to be an authorized practitioner, because it just helps us so much knowing they've established some relationship with somebody, at least, that we don't have to dig up some, a mentor form that might not work out. But anyway, you were in Lubbock, Texas, and you went through the program, you got hooked up with James. And so what did you do at that time with your graduate course, your PhD?
Yeah, I reached a point of kind of a breaking point where, I firmly believe that you can't get in a degree granting institution in the United States a formal education in Austrian economics. There are a couple of universities that throw the name around, and I wish them all the best. But in my view, the Misesian praxeology does not get taught. And that's really what I was looking for. And I learned in my first year of that PhD program that just wasn't available. And so I had to do something else. I wasn't going to wait table, and I'd wait tables all through college and worked at bars and different things like that. And something else had to give. And it was through a very unique set of coincidences. Of course, looking back, I would call them synchronicities and not coincidences. But, I did a reading group with Bob, just basically me and him. Other students were invited, but they didn't come, to their detriment. But I did a reading group with Bob in that year of the PhD program. And we read Karl Menger, the founder of the Austrian school, Karl Menger's Principle of Economics. And Friedrich Hayek had written an introduction. And in that introduction, he has a 2-sentence paragraph where he says that Menger's view of capital in Principles of Economics diverged from his later view. And this to me was brand new. I didn't know that Menger had a different view of capital that he would later develop. Come to find out, in 1888, he wrote a 52-page treatise on capital. And of course, by this time at Tech, I had already been familiar with becoming your own banker. And so here I am as a student of Austrian economics, discovering Karl Menger's later, much more developed and nuanced understanding of capital as the idea of monetary value of property, as opposed to the physical structure of production, which is the predominant view in Austrian capital theory today. And a light bulb went off. And I'm like, in that little 92-page book, Becoming Your Own Banker, Nelson talks about capital virtually on every page. In fact, I'd later count them. There are 73 mentions of capital. And of those 73, 72 are all very clearly in the monetary financial sense. And so it just hit me like as Nelson used to say, 2x4 across the head, that what Nelson was teaching in Becoming Your Own Banker was essentially Austrian economics applied at the individual level. And I had heard him say that before, but the depth and meaning of that came to me as like a revelation that no, this is applied Austrian economics, but more narrow than that, applied Austrian capital theory that is grounded in that school's historical tradition, specifically in its founder, Karl Menger, and then later in an American economist who was very friendly with the Austrian school called Frank Fetter. In fact, if people are interested, they should go to Mises.org, Mises.org, and type in Murray Rothbard, Frank Fetter essays. There's a collection of essays called Capital, Interest, and Rent, I believe is the title. And Rothbard went and collected these various essays of Frank Fetter. One of those essays is Fetter's definition for the Encyclopedia of Social Sciences of capital. And that understanding of capital is so rich and vibrant and fits hand in glove with what Nelson is teaching. Anyway, so I was coming across this entry in Menger's Principle of Economics and this line by Friedrich Hayek, and light bulbs are going off in my mind that I may have the opportunity to teach Austrian economics on an individual, personal, practical, non-academic way that actually matters to people, that could have a meaningful impact in their own life. And yes, I mean in the sense of acquiring a policy and controlling the banking function, but I also mean at a more deep conceptual, philosophical, educational level, that there could be a way to conceive of, to think of, to conceptualize what financial strategy is, not in the Wall Street approved slogans and marketing and all this nonsense that wafts around the swamp of a conventional American finance, but that is genuinely grounded in real, old, traditional, vibrant, nuanced, well thought out capital theory. And that to me, as I'm getting like hyped up about it now, that to me is extraordinarily powerful. You don't have to rely on, what the pop finance writers think or their little cute rules of thumb. You don't have to rely on what the media, the Wall Street Journal, you don't have to rely on what the Federal Reserve said, or any political state authority or those institutions friendly to it. You can base your thinking on finance in solid economic theory, Austrian economic theory, and then you can apply it genuinely, practically in your own financial decision making. And that's like, oh my gosh,
Like, wow. Yeah.
Yeah.
That's
what happened in 2017. And that was like, okay, this is too compelling to not do. And it only came later. It came in January of 2019 where I really went all in. I said, because the first 18 months or so were tough. I was still trying to figure out how to present myself to the marketplace to explain this message. And it was only until a childhood friend, challenged me when I was floating the idea of, going to teach instead. And she challenged me and said, "Oh, so you're quitting?" And I said, "Oh, no, I'm not." And so then she decided to dive all the way in. It was that year we started the Banking with Life podcast. It was that year that I went more fully into my online writing, my Medium blog, and things have continued to improve ever since.
Yeah. You really establish a unique position in the marketplace. I don't think anybody out there is even close to what you're doing. Yeah. And the Medium thing, that we publish articles all the time in our monthly newsletter because I think they're exceptional. They're conversational, but they're so clear and concise, and they start and they take you right through the whatever the subject is with a good tight closing. The great articles. So, you recently published a book. and I'm not going to talk about it unless you want to. But
we could talk about it.
Well, so you have a YouTube presence with James. We know that, we've discussed that, and you have your own little YouTube course that you have out there. Let's say YouTube, maybe a video course, okay, that you share with clients and prospects, and I guess I don't know, the public, whatever. So, did that get you at the point where there was so much misinformation about what's going on in the insurance industry relative to the infinite banking concept that you thought you had to really make a very strong connection and what the correct policies look like and all that stuff like that? Or walk us through that if you want to, how you started that and why you did it and what that led to.
Yeah, absolutely. So just to back up, so the book is done and it's going to be available. This is what it looks like. How to Buy Whole Life, a framework for becoming your own banker. There's an excerpt on the back that encourages people very strongly to first read Nelson's book, Becoming Your Own Banker, before reading mine.
Thank you.
Feel pretty strongly about that. There are, everybody should do what they want and all that. In my view, some of the finance books out there are marketing copy that is bound and sold as if it were a book. And that is not what this is. This is 237 pages of very rigorous type material. And it's connected to that series you mentioned, Whole Life Insurance Mechanics, which is on YouTube. I think it's maybe approaching, if not over 2 years old by now, but that's freely available to everybody, and I don't have, as you mentioned from the very beginning, I don't have any kind of like ClickFunnels or sales programs. Like, this is genuinely an educational approach. My attitude to new business generation, if you want to call it that, is attraction as opposed to promotion. So I'm not here to convince anybody. I don't want to change anybody's mind. I'm not going to blow up anybody's email or inbox or voicemails or any of that, right? I bring the message that I have come to understand and feel very passionate about. And I believe that those who are looking for that will eventually find it. And a good proportion of those people decide that, based on their interaction with that material, that they'd like to work together with me directly and become a client. And those are my clients, right? So I have a very unusual approach to operating in this business, but it is based on attraction, of putting out a message in a way that I think it needs to be put out in order to be genuinely, logically consistent and understandable. So the mechanic series came first, then now, of course, the book is coming. But the mechanic series really came out because I found myself in my process with new clients having these conversations, lengthy conversations. I mean, even today, I spend 3 to 4 hours directly with individual clients before we ever even look at an illustration and submit an application. Like, that's unusual, right? In fact, a lot of the times I'm slowing people down and saying, no, we need to cover this material first, or you're just not going to understand what it is we're doing and why we're doing it for you. Which to me is important, right? Whole life is a private asset that you own. This is not a managed money situation. At the end of the day, the buck stops with the client. And a necessary foundational understanding of what's going on here is required in order to do that competently. And for me as a professional, I'm not helping anybody. In fact, I may be hurting them if I put people into situations that they're not prepared for educationally and conceptually. So there's material that I think is relevant and necessary today that is not specifically in Becoming Your Own Banker, that is required for an individual to be both competent and confident enough to approach an agent, to approach an advisor. And so I would spend a lot of time talking with everybody about what I thought these things were, right? Why does cash value grow in a policy the way it does? What are the things that a policy owner can do with the policy? What does modified endowment contract status mean? What would cause one? What was the government trying to disincentivize there? What do we do nowadays in order to make sure, to the best of our ability, that that doesn't happen? What implications are there of that for policy design? How do we then take that bucket of knowledge and go to the industry today and choose a company, right? I have a conversation with people that, hey, you might actually want to have a set of criteria to evaluate the industry, to select a company that is best for you for the purposes of IBC. And even when I tell people those words, that's like they haven't heard that before, because a lot of times the agent says, oh, you want an IBC policy? Here it is. Here's the illustration. No mention of the company, no explanation of the features, no context, no contrasting with the rest of the industry. It's just, this is what it is. And it's nothing bad. I know they're coming from a good place and they mean well, and I'm not trying to besmirch anybody, but to my mind, that's not good enough. I want to know the alternatives. I want to know the context, the conceptual terrain, if you will, and I want to be able to navigate that. And so I was having these conversations with clients to help clarify that territory so that they can navigate it more confidently and competently. And honestly, I just got tired. I'm like, a lot of this material needs to be accessible without someone having to be on the phone with me directly, to find it at their. And so that's what led to the mechanic series. And honestly, a lot of that same thinking is what led to the book.
Yeah, somebody calls you up, says, okay, I'll watch these videos first and then we'll talk, right? So I don't have to go through everything over and over and over again with you. So that was the concept of the video series, the mechanics. So if you want to talk to me, watch my 6 hours of videos or wherever you want to, however long they are, before I have to reinvent the wheel with you every 15 minutes. But you talked about the right policy and the landscape of the insurance industry and the different companies and whatnot. Well, are you contract with multiple carriers? And so you have different options for different clients and whatnot?
Yeah, I'm no company's employee. I am independent, and I am, as of this recording, contracted with 3 different companies. And I don't talk about specific companies publicly. And this also irritates me when other people do this. These companies change. The policies and products on offer can change. And I don't need somebody in 5 or 10 years picking up a video that I did in the past saying, oh, well, Ryan said company X is best for IBC, so I'm going to go get that policy from that company. That may or may not be the case. We have to evaluate the industry as it is at particular times and places when we're going to go get a contract. And look, I don't want to beat the company selection question up too much, because at the end of the day, we're picking from a selection of mutual companies that have been around for at least 100 years that have paid a dividend for every one of those years. This is a very safe, very secure industry in general, talking about mutual life insurance companies. All I'm doing, though, is following the same thought process that attracts me is, well, given that I have multiple options, why not optimize? Why not be selective? Why not pick the best available at the time for me? And that could theoretically change. So while I am contracted with multiple companies, I believe just about every agent have their preferred one or two for whatever those reasons may be. My reasons are founded in my understanding of the infinite banking concept. In fact, on my YouTube channel, there's a video that has the words five criteria in it. It's a very long title, but 5 criteria, Ryan Griggs. And it's an hour of me talking through the 5 criteria that I use to evaluate insurance companies for IBC purposes. But that's, part of the deal. And in fact, one step further, if somebody has a deductive, nuanced understanding of why this or that company, then you can become familiar with the particular terms and conditions of that company's policies. And that more specific product knowledge can then inform how you decide to design a policy for someone's particular situation. Right? Like the degree to which the PUA rider is flexible, whether the company allows for scheduled versus unscheduled payments, the degree to which you can catch up for missed PUA, the type of term rider and what that means for how many years you can pay PUA premium. All of these types of considerations that vary across companies matter if we want to create a tailored solution, a tailored branch of the banking business for a particular client. And so the policy design process occurs organically, simultaneous to the development of this better understanding of how things work. And it all comes back to what Nelson said. If you know what's going on, you'll know what to do. And so I just take that very seriously. Let's develop a solid, clear understanding of what's going on, and then you'll know what to do.
Well, doggone it, Nelson put me in the same policy over and over again. I was like, I didn't have any options. No. No, that's
Well,
good.
if I had the opportunity to say yes to Nelson Nash, I would have said, sign me up, sir, whatever you say.
Yeah,
But
whatever you say, yeah. But there's a lot of noise out there in social media land about policy design. I know you labeled that creative policy design versus IBC at one point. It seems like the primary goal in creative policy design is to create as much cash surrender value immediately as possible. I guess when I say that, I'm talking about something like a 1090 policy or whatever, 10% base, 90% PUA premium paid. So what are your feelings about that? I mean, is there a scenario when a 1090 is appropriate for a client in your mind or not?
we'd have to sit down and really imagine it. Look, IBC is not a type of policy design. Core elements of IBC include Nelson's rules, two of which were don't be afraid to capitalize and think long range. And the anti-base premium approach to premium structure violates those rules. It prioritizes maximum cash value as early as possible. And then you've got people online, enthusiastic amateurs and professionals who will then share pictures of tabular detail or table of policy values on these various illustrations. And the implicit, if not explicit, idea is to identify when either the annual cash value growth first exceeds the total annual premium, or when total cash value first exceeds the cost basis. They'll pick one or the other. And the earlier, the better, right? That's the presumption. And the way to get that done is, as I say, an anti-base premium approach. You want to squish the base premium down as much as possible, blow up the PUA as much as possible, all relative in percentage terms to the total outlay. What's required to get this done in a non-MEC fashion is loads and loads of term rider death benefit. And so the agent, in order to add a bunch of temporary death benefit, will use the most cost-effective way to do that early on, which is a 1 year or annually renewing term rider. And the result of all of this whole approach, is a extremely limited PUA duration, right? We say, and the language of premium structure obfuscates this. We say 1090, and the idea is, well, then I can pay 90% of my total outlay in PUA premium in every policy year. And that is wrong, right? When I say that PUA duration, that we lose PUA duration when we take this anti-base premium approach, what I mean is we significantly, severely reduce the number of years that we'll be able to pay that substantial PUA premium. It'll be far less than if we had a more substantial base premium and the proper long-dated level term rider, if we're even going to use one. The net result, and by the way, an example of this is shown in lecture 6 of my whole life insurance mechanics series. The end result is dramatically lower cash value and death benefit growth over the lifetime of that policy than if somebody had taken a more Nelson Nash IBC style view. Right? If we just back up from this for a second, modified endowment contract rules exist specifically to disincentivize the substantial acquisition of cash value relative to death benefit early on. That was the point. Okay. And so if that's what we're going to do, right, we're going to go play with the modified endowment contract rules, then we're going to have to push the contractual features of the contract to the extreme in order to get that done, right? And by the way, 1090 is not as low as you can go. There are companies that will do 595, 397. I mean, why stop there, right?
Yeah, but
it's like
1090 has got a good ring to it, though.
Well, I'll tell you where that comes from. The people who are behind that slogan work with a company, and the products of that company, the terms and conditions of the product of that company state that that is their limit. And so the people promoting that just went to what the company, that particular company, would allow, and they turned it into a marketing slogan. And that's how everybody talks about it now, right? But other companies will let you go lower. So my position is I want policies into which I can pay as much premium as I can reasonably foresee, wanting the ability to pay for as long as I can do it, all while retaining preferable non-MEC tax status. And that is a long-term oriented view. That is a view that is willing to capitalize, right? Willing to embrace that early illiquidity, and that will result in maximum cash value and death benefit growth in the policy. And it's not like we're giving anything up, right? It's not like there's a massive loss of early liquidity, or that we can't generate any cash value early on. That is not the case. Right? There is still cash value early. People still can take loans in the first year if that's their thing. Right? We're not giving that up. But what we're definitely not doing is sacrificing the important foundation of the contract, which is the base premium, in order to achieve an ultra short-sighted objective. We're not doing that. And my view has, I used to say that this view is right, that view is wrong. I've changed on that. My attitude now is, if people want to live on fast food, God bless them. I'm not here to go around and tell people what to do and what not to do. If somebody wants that early liquidity, ultra high PUA, anti-base premium approach, if they want to eat up their insurability and severely restrict the amount of PUA that contract will accept over time, hey, have at it. But I'm not, God did not call me to work with everybody.
No, I'm sorry you guys are worked up on that one, man. Woo! So
there's a lot there, David. There's a lot there. I mean,
there's a lot. There's a lot there, and I just the Nelson Nash Institute doesn't have a written policy about policy design because like you said, it's a 1090 might be something appropriate for a specific client's needs or whatever. I don't know, but you talked about the 5 rules of IBC, and don't be afraid to capitalize is critically important, and a 10% base is not capitalizing a policy. And then think long range. A 10 pay is not thinking long range. Okay. Or a policy where you have to keep reducing the PUA year after year after year after year to keep it from going to a MEC status is not thinking long range. So I'm glad you mentioned those. Those are critical. And Nelson used to say over and over and over again, this is ridiculously simple. Quit making it complex. Quit making it, there's a lot of nuances and complexity to it, but it's not complex if you understand what this is really all about, And unfortunately, the more momentum the infinite banking concept receives in the marketplace, the more baggage, unfortunately, is generated to hang on to it and make it complex. Of course, everybody's got to put their own twist on it too, so they can stand out above the crowd, unfortunately. But I appreciate your comments, and I wholeheartedly agree with everything you're saying. There's no doubt about it. So
thank you. And I appreciate that the NNI doesn't have a stance on, this or that way, this is the right company, those are the wrong companies, or this is the right policy design. These aren't. I mean, I believe in the marketplace of ideas, right? I'm okay to go out here and present my view, and other people can present theirs. And I believe that individuals are competent to make their own decision, and people will make their own decision. And I think that respects individual agency. So I'm cool with that. One thing I'll say on this is, this 10 anti-base premium maximum early cash value approach thing, I think is successful in part because, as I say, Wall Street has convinced people that identifying the difference in the size of 2 numbers counts as financial analysis. Like if I can say, ooh, big number here, small number over there, look at that. Why would you not do that? It's a compressed, superficial, shallow approach to what is not even close to real financial analysis, right? But it's clickbaity. It's goldfishy. It's, I can make a flashy presentation and I can show a big number here and a little number here. The mechanic series is 8 freaking hours long, right? But somebody can put up an illustration and in 3 minutes say, look, big number here. It's like, okay. So, I mean, I understand why some take that approach. And like, as I say, my people who ultimately become my clients are looking for something deeper. And so that's who I talk to.
Well, I mean, something deeper is good, but I like it. I like the term something more honest. Okay. And you're getting both sides of the equation. You're not being told what you want to hear. And, you know, with the policy shopping that you see nowadays, it's like, oh, let me, send me an illustration. You know, I'm 55, you know, da, 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 da. It's like, sorry, we're not shopping around because you're not going to compare it to something that looks better to buy it. But yeah, no, I appreciate that. And it's the right message to share. So your business is 100% infinite banking concept related business. Is that correct?
Yes.
Okay, so how many clients can you handle in a situation like that? Are you limited by your time, or is your book and your video series, is that enabling you to spread your intellect more fully across the spectrum, so you can gain more and more clients and provide them service at the same time?
Yeah, there's a lot of layers there. So, you know, I'm in a different PhD program now, completing a dissertation on capital theory. I have ongoing clients, of course, current clients, various creative projects. You know, I mentioned earlier, I'm doing a website redesign where we're going to add a login functionality for people to, you know, clients to get access to client only material, and then members of the public to, you know, purchase digital products and whatnot. Like one of the things there is I've done a review of one of my own policies, both looking at the illustration of it and real annual statements. And because the people have constantly asked about examples and examples and examples, and I'm like, let me just hit them with one of my own. So we're going to add that functionality. But point being, there's a lot of creative projects. And, you know, I had this question from a client who's currently in progress right now, you know, and I stress online, and I stress in the book that somebody who's approaching an agent should reflect on their potential needs for ongoing support, right? Client service or client support. A lot of guys and gals out in the business just tell you, once the policy's enforced, if you need something, you need help with something, just go talk to the home office. You know, that doesn't fly for me. I don't want to be told that in my capacity as a customer with the professional service provider. And that will not be, you know, from my office to my client. So I prioritize client support. You know, part of providing good client support is providing a solid educational foundation from the get-go, because a lot of questions that may later come up can be addressed preemptively with the proper educational foundation. And so that stresses all the more to have a rigorous initial educational foundation in place. That said, we are available. And the way I say it is, you know, if you become a client through my office, at least as it stands right now, you're going to have ongoing access to me, the principal advisor, or whatever you want to call me, on an ongoing basis for substantive strategic decisions and questions. Right? I actually work with my mother, happy to say, and she's worked with me for a few years now. And so she'll help with more administrative, more clerical type matters. But the more substantive strategic things, those are with me. And look, as time goes on, you know, and if the book goes well, and we'll see, I really am not in the outcome business. I don't try to think in terms of whether this is going to produce X or Y increase or percentage in sales or anything like that. I really don't think about that. I don't even know how many clients I have. Okay. I try to operate based on principles, and theoretically there could come a time where I'm not going to be available to work with new people, and I'll have to make a change at that time. I'm not there yet. And I still have available times to talk with new clients. We're still accepting new clients. So we're not there yet, but eventually that could come. And when it comes, if it comes, my current clients will remain the priority. I view this as the market applying the pressure that forces evolution. Right? If I get to a point where, for whatever reason, God willing, I'm so successful, well, then that's going to become an indication that I need to reevaluate my priorities, because I'm not going to stop serving my current clients. That's just not going to happen, because I'm not going to be one of these guys out here that, you know, look, a lot of my clients, a good chunk of them, are people who have been, I say, refugeed, abandoned by other agents out there in the world. People who want to get another policy, know how much premium they want to pay, can't get a hold of the agent to do it, because the agent is obsessed with their marketing funnel. It's crazy. And so I cannot, as a person who sleeps at night, I can't be that. So look, if things go well, and I can't even believe I'm thinking about it, like this, it's a blessing that this is even a possibility, right? But if it comes to the point where I'm not able to take on new clients, okay, well, maybe that's the market telling me that I need to bring up staff agents or staff advisors who are going to be able to accommodate that business in a way that I feel is legitimate, that, in a way that I would teach and approve of. So when that bridge comes, we'll cross it. And until then, I'm going to continue to lay out the sort of educational perspective that I have, and, we'll wear that out.
Let's talk about your relationship with Nelson. And he was known as a storyteller and joke teller. Do you have any memory in mind that stands out to you from your interactions with him over the years?
Yes, absolutely. So I knew Nelson from his age 85 to 88 when he passed, the last 3 years of his life. We met in person several times. I don't know exactly how many, but I was present for 2, maybe 3 of his seminars. And then like when he would come to Texas to visit with James, of course, when I would go to Birmingham, Alabama for the annual think tank, we'd always have opportunity to interact. I have photos of us where like he used to have a pin, the Nelson Nash Institute pin. And I have a photo of where I think it was at the last think tank where he's giving me that pin. So yeah, there's lots of memories. Probably the one that stuck out to the most as you were starting to go through that question, I remember being in my little tiny itty bitty apartment in Lubbock, Texas, after having finished the practitioner program. And he just called me. And I answered the phone, and I hear you can't mistake his voice. And I didn't even know what to say. I'm obvious, as you might be able to tell, I'm not often at a loss for words. But I didn't even know what to say. Who is this guy, triple plus my age, with a book and a movement behind him, calling me as produced nothing, hadn't sold a policy, barely could spell life insurance. And he's calling me to check on me and to talk about economics and history. It's like, I really, looking back, I wish I knew better how to act and to like engage with them, because I was so caught off guard. I had never experienced that degree of genuine, intimate, fatherly, grandfatherly connection. And the truth of it is, I didn't know how to handle it. And so I made it up as I went along. Another one that sticks out to me is, as I got to know Nelson more, I, of course, felt very loyal to him. And there was a historian who I won't name. He's passed away now, but affiliated with an organization I'm familiar with, and this historian had written a scathing, brutal, awful set of articles about Nelson personally, about the infinite banking concept, about whole life insurance. I mean, it was nasty, just unprofessional, personal. So I wrote a line by line. I quoted like dang near every line of the primary article in this series and refuted it, kind of maybe a little viciously, but forcefully. And I got one of those calls. I was driving back from James's house in the DFW area to Lubbock. I remember it like it was yesterday, about 30 minutes outside of Lubbock. And I get a call from Nelson. And he was upset with me that I had written this. And he said, there's light and there's darkness, and you just need to focus on being the light. Don't play around in the dark. Don't get down in the mud. And I said, I don't know exactly what I said, but something to the effect of, well, yeah, Nelson, but people are going to read this stuff. And this isn't true. It's personal. It's slanderous. So I think a good cause should be defended and stood up for. So we ended the call, and I'm like feeling horrible on the rest of the trip back to Lubbock. Like, okay, I have this thing about like, look, if I say something, I'm not taking it down. Like I said it and I mean it. And so now I've got the man, Nelson Nash, saying you need to reconsider and potentially take this down. Well, I didn't that day. And then the following day, I got another call from him. And he said, I slept on it. I prayed on it. And you know what? You're right. You should leave it up. It needed to be said. And imagine that humility, telling me, who was being a pit bull, and then going back and reflecting on what he had told me and changing his mind. I'm still floored by it.
Well, he loved his people, that's for sure. And he loved being around people and connecting with them. And he loved a phone call. Absolutely. I think he would just go through his phone book and call people during the day and catch up. And that was one of his favorite things to do. And that's what gave him, energy and, just fueled his passion for this. And he was so excited about the new people coming in, and especially the younger generation coming in. And, he said all the time that he, just was blown away by where this movement had become by the time he passed away. So, and you were definitely part of that. So
Most people I talk to say think about him every day. Something just that somebody says or does or whatever, just like you just think about Nelson, and either how he would approach something, or just a comment run through their heads. So that's consistent with everybody we talk to. So anyway, I don't know downer, because he's where he wants to be right now, and he's doing what he wants to be doing right now, and we're trying to keep him forefront in the public sector, and with all the issues in the industry, and just keeping things as clean as we can, and keeping it as positive as we can, and thinking about abundance, not scarcity, blah, 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 blah. There's a lot, there's a lot of things that I learned from him about how to approach these things too. And it's like, so some people, believe that we're not aggressive enough as we should be, but I don't know.
Well, Nelson wasn't an aggressive man.
He was a giver is what it was.
Yeah.
But, yeah.
I want to say this too, though, David, because I happened to cross, unfortunately, some other media thing that I'm not going to be specific about, but there's an idea generally out there that I've heard, that the Nelson Nash Institute is just a cult and we worship Nelson. And, people who think that really should take the opportunity to reconsider. It's really a very silly idea. Nelson generates the respect and admiration that he does because of the quality of his character and the integrity of his ideas. That's what's attractive. And if Nelson's a cult leader, he may be the worst one ever, because there's been plenty of internal division among membership at episodes in the past. Nelson would get up at every seminar, and the first thing he'd talk about is his Savior, Jesus Christ. I don't know how many cult leaders you hear talking about that. And he was always gentle and kind with dissent and argument and debate. Not the authoritarian tyrant that people might get the image of when they hear these people talking about how NNI is a cult. So I just want to acknowledge that. I'm sure people at some point will have heard that. That's not what this is. These are people, and at least I'll speak for myself, that I'm somebody who knew him directly, and I am willing, and based on my economic background, to put in a professional sense what I understand of what he taught on the line, right in front of people, and they can accept it or reject it based on the merits. And I think I have a superior case to be made. And that isn't dogma. That's not religion. That's not, forcing anything on anybody. We're just making that available. Nelson's book is available. The media production from the NNI is available. The Banking with Life podcast is available for those who are interested in learning about it. And those who don't want to do it, then that's fine. It's the exact opposite of a cult. And I would encourage people who have maybe harbored that thought to take an opportunity and reconsider, because it's silly.
My perspective is we're trying to protect the public. And the only way I can protect the public is recommend somebody who I know is doing it right, because there's so many, like we earlier in this discussion about these policies and stuff like that. It's like, oh my gosh. And a lot of people make a living, like you said, with orphaned clients, or with trying to recover a policy that's going the wrong way, So anyway, my perspective is, Nelson always did the right thing, and he always put, his client or his public at the forefront of everything he thought about and talked about and did. And so we're trying to do the same thing here. That's the bottom line. And so, we hopefully, his persona, okay, and his code of ethics is what will keep us clean, moving forward, because we don't promote, like you said earlier, insurance companies or policy designs or this or that or this or that. It's like, please, as a client, educate yourself, know what this is all about, get with a producer who understands this, and who's going to do the right thing by what you need and what you can manage, both financially and also, mentally, so you can get your head around everything going on here. So that's the essence of what the Nelson Nash Institute is trying to do. And we have all kinds out there, man. I mean, all kinds of practitioners, man. We got the ClickFunnels lovers, and we have the big social media types, and we have the mom and pop shops that wouldn't know what a YouTube was if they had to. Somebody threw it at them,
Yeah, I mean, I tell people, if you want to do what Nelson Nash taught, then go to the source. In all things, if you're going to adopt any kind of way of living or any kind of method for anything, I don't care what it is, go to the source. Start there. Like James has said in the past, becoming your own banker is like that pair of red and blue glasses that they'd put in the cereal boxes. It's the decoder. You can vet people. You can vet me. You can vet anybody if you're well grounded in what Nelson taught. And then there are other people who don't want to do what Nelson taught, who want to do what I've called creative insurance design, who want to maximize early cash value, who are not willing to think long range, who are afraid to capitalize, who are not willing to rethink their thinking, who can't wait to steal the peas, and who don't want to be an honest banker. And that's not meant pejoratively. That's just that's what people, if people want to do that, then it's a free country still. They can go find someone to do that with. But for the people that I'm talking to who want to do what Nelson taught, go get grounded in what he taught. And then look for, I want to encourage people on this front too, because I think people are made to feel bad, because they didn't, get a degree in finance or economics. And my attitude with people is always good, less to unlearn, right? It's not like there was anything special that you're missing, right? Trust your instinct. Ask your questions, get your questions answered. If it's not feeling right, if you don't feel like you're seeing the full picture, move on, right? You're not bound by blood oath to, commit to anyone or to follow a program just because there's some fancy name behind it. Trust your instinct and get your questions answered. And this can work out really well for you.
Great conversation. I really appreciate it. If we had another hour, we could delve into maybe something like a universal life policy. So do you get into that at all when you're in your new book, the UL thing?
Not substantively. Nelson dealt with it very well in his second book, Building Your Warehouse of Wealth. This one. There's a chapter in there. I won't shuffle through to find it now, but he explains that the death benefit component of universal life is essentially annually renewing. So it's repriced every year. In my opinion, you hold the policy long enough, you live long enough, then the policy is designed to fail. Either the death benefit's going to go down, the cash account value will drain to zero, the premiums will rise, and if you live long enough, all three will happen. So that's the opposite of what one would want if you're looking out to the long term in your own life, but then also intergenerationally. It's just not the appropriate vehicle for taking over control of the banking function in a sustainable manner.
Well, Ryan, we end every episode with the same question. What does the infinite banking concept mean to you?
What the infinite banking concept means to me is the opportunity to reclaim ownership and control over the banking function, which is to say, to purposefully, systematically accumulate and protect capital at the individual level, to reclaim legal, private, contractual, tax preferable control over the accumulation and use of capital in one's own lifetime. And that means seceding from the conventional paradigm. It means securing your finances, your economic possibilities away from the conventional system, which means securing it from the business cycle, which means protecting it from a legal standpoint. So what it means to me is it's a way to live a financial life, just as Nelson said, that's very, very peaceful. And if you stick with it, very, very prosperous.
Well, thank you, Ryan, for being with us and for sharing all of your knowledge and how you are continuing this this movement in your own day-to-day work, and also sharing some of your passion with us. We appreciate it. Thank you for your time.